13 Market Moves Daily, May 16, 2019, Thursday. Guys, patience is the key in this market. For those of you that manage to stay with your call positions when we're buying them on Monday, congratulations. I know some of you are making 40, 50K plus this week. And for those of you that are not having the same type of outcomes and results, and of course it all depends on the size of your accounts and positioning and whether you're able to buy puts, calls in the money or out of the money, that will definitely have an impact on the results. But overall, I can tell you guys with 100% certainty that the difference between the guys that are having substantial breakthroughs this week and the ones that don't is the patience. So try to stick with your positions, because when we're trading in a tunnel and the market is working its way from the lower range of the tunnel to the upper part of the tunnel, you shouldn't be expecting everything to be rosy and nice. You should be expecting the market to be testing your patience. You should be expecting the market to be giving you a heart attack intraday as you're watching your account size going and fluctuating intraday by quite a bit. But this is what happens with weekly options. And for some of you guys, the main recommendation, if this is too stressful to be dealing with weekly options for some of you, you don't have to buy weekly. You can buy options that expire in 2, 3, 4 weeks from now. Those are not going to be as volatile. You're not going to make as much money, but overall, they're going to be a much easier alternative to trading some of these weekly options. And the main difference is this: markets do go higher much, much slower than they drop. So naturally, when we're using the call strategy, you should be much more patient, because the market does not automatically go up in straight line as it falls. It actually is going to up, down, up, down, up, down. So more on that in just a second. But the main observations from yesterday, May 15th, is the markets did break above the mid-trading range of the tunnel, which was 28.52. They went about 8 points higher, stalled out at 28.60. And then I've been watching the markets since early this morning. There was a point when they actually dropped about 7, 8 points below that. So we're basically overall, we're holding this level, which is important. And clearly, as I'm recording this video, we are above 28.52 slightly. Now, buying the dip is back in style officially, guys, and a bunch of companies were reporting their 13K filings yesterday, and a ton of them, besides Warren Buffett, besides Berkshire Hathaway disclosing almost $1 billion stake in Amazon, there was a ton of other managers that actually were buying Amazon shares in the last quarter. Now, what they were doing last quarter may not be relevant to what and how and where Amazon price is going to be going and trading in the near future. However, that tells us that they were buying last quarter, they were buying Amazon shares anywhere from like 1,600 to 1,800 level. And accumulating that many shares around those levels, they're also going to be the ones supporting. So from the standpoint of a longer time frame, I wouldn't be surprised if Amazon possibly revisited its high level of 2,050. Now, because so many money managers are so prominent that acquired Amazon, Amazon is up pre-market about 10, 15 bucks. So again, congratulations to those of you guys that bought Amazon puts when markets were dropping 700 points Monday and managed to stay this far through your positions, because there are multiple times when Amazon's was making a pullback to those levels of 1820. And I know it's been a challenge for some of you to actually stick to the positions. Number 3, important, move 8. Which was the move yesterday, guys, is an indication of further bullish behavior in most cases than not. Watch out as far as locking in some gains today. We may have a great opportunity to do so around 1, 2 p.m. when the market should hit about 28.79 on the S&P futures. And we're going to cover some potential earnings considerations here: Walmart, IOVA, and VIX. Now, here's where we are as far as the trading tunnel. And here's some possible exits to consider. So exit number 1 would be this area of 28.70, or right under that, 28.69. So if you got, let's say, 10 contracts of a particular holding, it may make sense to start locking in some gains. So when the market trades to about 28.70, sell maybe 2 or 3. When the market trades to this level of 28.79, sell 2 more. 2, 3 more. So basically, start taking your positions out about 30%. So as you're getting closer to the higher trading range, we don't know specifically where these bull party could stall out and where the levels are going to be the highest. Ideally, we want to revisit this high that was established like a week ago at 28.93, and then we want to watch for the volume. I had a question in the group yesterday saying, okay, so we're in the high trader range, should we just go ahead and short a bunch of stocks? Should we buy a bunch of puts? The answer is no, because when you start to see moves like 8 with a clear behavior of the 13, by the way, good job on someone's observation in the group that it was potentially a move 13. We're going to discover what is the difference actually between 8 and 13, but clear, yesterday we did have this behavior of a 13 move, so good job to those group members that did identify it. And basically the idea is this: when we get to the higher trading range, there's always a consideration, what are the signs that we could actually break above that higher trading range and possibly start trading in the newer trading range? What is the consideration that we're not going to break that level? One of the key criteria is watching the volume and the key stocks, and that's what we're going to be doing today and tomorrow to determine whether there is a probability of actually breaking that level as we get close. However, oftentimes, we are going to stall. We're going to stall. So don't be expecting as huge of a market moves as we have recently had in the last 10 days. Okay, also to note that if the market drops 7-8 points under, there is a great probability that institutional investors are going to come in and buy the dip. So if you see the futures at some point drop between 28.52 to a level of like 28.45, that would be a good area to actually come in and buy the dip, because that's what they were doing pre-market pretty much all morning. They were buying the dip around those levels. Okay, the main issue we described yesterday for the further bull case was that gap lower that was created. And so I've showed you a chart of this, which was Nasdaq. So this was the gap that we were worried about. Now, oftentimes the markets will not close that gap and they will reverse and it will move lower. I've showed you the picture, and this is how it actually looks from yesterday. Look at this huge bullish candle. Now, we're not completely out of the way yet because we're hitting that 50-day moving line. But considering the action pre-market, I think we're going to break above and move higher back to revisit these high levels at some point of 8,200, definitely 8,000 level. But the thing is, we're not 100% there. And with the rocky headlines, I mean, we could maybe go slightly above that and stall out at these levels, potentially going sideways for some time. So very strong bullish reversal yesterday does indicate that the markets are likely to close this gap. This gap is almost filled, so just a slight move higher today in Nasdaq and S&P will actually close this gap, which is going to be super bullish because, again, in more instances than not, this bearish gap does not get closed, this gap down. They don't get closed pretty much instantly right away. And in this case, they are, which tells you the bulls are really strong around these levels. Same thing we're observing with the S&P yesterday. We had this big gap that we pointed out to, and by the end of the day, look at this powerful move, powerful bullish reversal move on pretty decent volume. So here's some of the earnings plays that we're considering. This one is not an earnings place, guys. IOVA is the ticker. It is a cheap stock, but it had some really good trial results that were announced after hours yesterday. So I've looked at the chart. It is not our typical target because it is a cheaper price stock, but considering the charts, I think it can make a substantial move higher. Pre-market so far trading around 13, 14, closed yesterday at 11. I think the stock could go to 20, and the options should not be very expensive. So as you can see, overall, the blue line is about to cross the orange line, which is very bullish. Okay, look at this very strong uptrend. So this was your lows. Then you got a lower high, a lower high, a lower high. So very powerful uptrend right here. Look at this huge volume that was coming into the stock, right? And overall, last couple of weeks, the volume on the upside is exceeding the volume on the downside. So everything looks good as far as the weekly chart. It looks like they are coming in and accumulating, and they were accumulating going into this not earnings release, but this trial data announcement. And if we take a look at the weekly chart, everything looks rather bullish. What I do like, particularly what's been working lately, is this reverse head and shoulder. So we clearly have a reverse head and shoulder right here. So that's the head, that's the other shoulder, followed by a huge spike in the volume. I love that. And then just last few days, we had a bullish reversal candle that was created. We're sitting right at these levels, so pre-market we're already above this blue line. So the case is likely that this stock could visit the $20 mark in the next 20 days. Ideally, you want to buy in the money puts, 10, 15 strike, around these levels. And just give it some time. Again, you always want to give more time when you're buying calls than when you're buying puts. So, buying a little extra expiration time on something like this would definitely produce better results. Now, we're watching Walmart this morning. We're not likely to trade it. Everything looks super bullish on Walmart. Hit a high of 102.87, which is a dangerous level for Walmart, guys. Yes, I'll show you in just a second why. So jumps higher, drops to this 98.50 level, and works its way back higher above 102 as I'm recording this. Now, the interesting thing with Walmart, look at these green dots right here. Every time it hits this level of 103, it fails. 103 here, drops. 103 here, drops. 103 here, gaps down, and can't climb out of that gap down till today. And rather bullish, like this was the last earnings report where it actually went substantially higher and reversed and lower, and it just stalls out. So if it breaks above 103 on very strong volume, it would actually make sense to buy calls because it tells us that we're in a totally different situation than the last 3 times. But if it stalls at this 103, 103.50 level, a better trade would be to actually buy puts. Now, the markets are rather bullish, so it could be a dangerous place. So you really got to watch out in this 103, 103.50 level to decide which way you want to go on Walmart. Now, we are considering WIX, W-I-X, not VIX, but W-I-X calls. If you understand what the WIX is, it's basically kind of like Shopify, and as a correlation trade that makes a lot of sense. This is so far what WIX is doing pre-market. It's dropping from 143 to 134 on very, very light volume. Only 4,300 shares so far has been traded and created this huge drop of about 10 bucks. This gap likely to be closed once we open rather rapidly. Going back since Shopify just recently announced earnings in the last couple of weeks, this was actually the initial reaction of Shopify. It actually dropped, and then throughout the session of that day, not only did it close the gap it created pre-market, but it went substantially high. And that was the day Shopify actually went like 17, 18 bucks higher for the day. So if it is going to repeat the behavior of Shopify, which the probability of that is high, we should see the stock substantially higher over the course of the next day or two, meaning like today, tomorrow. So it is highly correlated to Shop. As you can see, their charts look identical. They're all trading at all-time highs right now. There are some bearish things that we can point out to here. However, again, if we use this as a correlation type trade, WIX has a substantially higher chance of breaking out higher from here, and certainly I would recommend watching right at the opening to see where is the volume coming in as far as the call versus put activity before you actually initiate this trade. Market move yesterday was a move 8, which is quite of a rare move because it doesn't happen often. This move typically is hidden between a combination of bullish moves. Notice I said a combination, meaning in move 13, we typically drop, and this is sort of your climax move. This is your last move lower. In move 8, it happens in between of a couple of bullish days. So yesterday we had, or the day before yesterday, because this was a market move for yesterday, actually for May 15th. The day before we had a bullish move, it was a 7. And yesterday we got an 8. That puts us in a high probability of getting another bullish move today. So that's the significance of a move 8. It tells you that the probability of a reversal lower is very unlikely because these moves 8s, again, they're rare. They're rare because of their nature that they're hidden in between a couple of bullish moves. And so we don't know specifically exactly 100% what the bullish move is going to be. We clearly have 3 possible variations, but it tells us that the probability of a bullish move is highly increased. So what is the difference? So the difference in the move 8 in relation to the move 13, for example, yes, we do get a gap down pre-market. It opens much lower in relation to the previous day, and then it starts moving substantially higher. Now notice this break higher does take place at our target time frame about 10-10-15, actually 10-15, 10-20. The market turns positive in relation to its prior day closing level. Okay, so that's the importance. Also, the importance is look at the volume. So this move higher happens on substantial, higher volume than what we see anywhere else on this chart. Now, in a move 13, you typically would have this. So this is a behavior of a move 13. However, it's going to be much more greater. Like the move 13, the gap down pre-market is going to be way bigger, way greater. The volume is going to be flying all over the place. It's going to be crazy. So we can't really say that about yesterday's move. And a lot of time in move 13, move higher is going to happen literally within the first 15-30 minutes. And also some of you may be comparing this to a move 4. In move 4, we drop lower initially with a gap lower, but we don't turn positive until like 2, 3, 4 p.m. Typically at the very last part of the day, the market will finally grind a move higher just slightly above the prior levels. Now in this case, in move 8 and 13, the markets have a chance to substantially move. They open with a gap lower, but they have a chance to substantially move much higher than the prior day's level. So the move 13 would be just a much greater volume, much more dramatic volume on both sides, to the downside and the upside. 2-day sequence, 7-8. Very interesting observation over the last couple of days, and that's why I'm recommending for those of you that are trying to lock in some gains from your Monday entries. Target this 1-2 p.m. If we analyze and move 7 the day before and then move 8 yesterday, it's clear that the top trading levels of the day were created around 1-2 p.m. As you can see, there was like a double top created here, and it was a double top created here yesterday, right around 1-2 p.m. So if you're looking to get the biggest gain for your buck, there is a higher probability based on the behavior of the last couple of days that says your best exit is more likely to happen around 1-2 p.m. guys. 5-day sequence, 2, 4, 3, 7, 8. Man, look at this. The bulls are back in full control. Check this out. It's pretty much all green. So this is how it looks. Actually, we're pointing to this creation of an uptrend yesterday, and this was on a different time frame, and as you can see, it was confirmed, right? And now on a grander scale, we can see how things are definitely starting to move higher. What we're noticing, when probably a lot of you guys were getting scared yesterday when the markets were dropping pre-market and you were sitting with a bunch of calls there, the most important thing to observe was the divergence between accumulation and price. So while the price was dropping, look at the accumulation. Look at this blue line, right? It wasn't dropping. It was actually going higher. So observing this could have helped you stay a lot more calm, a lot more at peace with keeping your bullish positions, guys. So just keep an eye on some of these divergences. They will definitely make a difference as far as you not jumping out too early and prematurely. VIX review, guys. VIX is doing exactly what we expected it to do. After creating this head and shoulder a couple of days ago, we expected it to drop from this 18-19 level, and so it did. It was actually moved too on the VIX yesterday, so it pops higher and then it keeps continuing to sell off throughout the day, hitting the level of 1641. Now, VIX is likely to, at some point today, hit this level of 1557. And the most crucial thing is going to be, is it going to break that level or not? If it does break that level of 15.57, the easiest trade in town period is just simply buying calls on anything's names, indexes, and ideally you want to buy them in the money and be patient. So you can simply split a trade by buying some of these Friday expiration calls for tomorrow. If VIX drops between 50 and 57, notice I'm not saying buying VIX calls, right? You'd want to buy VIX puts, but instead of buying VIX puts, you ideally want to buy calls on all the top stocks and the indexes. That's going to be the easiest play. So if you see it drop below 15.57, buy some calls for tomorrow and buy some calls for next week. And again, you got to be patient. You got to be patient because the market could just keep grinding its way higher, just step by step, without making any crazy moves higher. The probabilities for the next market move, that would be for today, we're expecting either a move 1, 7, but we are going to be paying very close attention going into the close between 3 and 4 p.m. trying to see if there's going to be a move 6 coming in. So again, that's why ideally, based on the observations of the behavioral patterns of the last couple of days, we suggest possibly taking some gains around 1, 2 p.m. because there is a slight probability that we could get a move 6 creeping us at the very end of the day, and we don't want to be unwinding the positions there. We want to take that action right before going into this time frame of 3 to 4 p.m. And clearly, if this move 6 and it is on high volume, I mean, this could be a potential time frame to consider buying some puts, but the market is just so bullish right now. I mean, we may not even want to do that. A much better strategy at this point could be just simply sticking to what institutions are doing. If they're buying the dips, we want to buy the dips until we get and hit that ultimate high trading range of the tunnel. The key takeaways: market will likely retest the high trading range of the tunnel today and tomorrow. Watch for a significant break in the VIX below 15.57. Watch for possible move 6 behavior between 3 and 4 p.m. Watch for 1, 2 p.m. to clock some gains and buy calls on the dip. And overall, market is holding that 28.52 pre-market. But again, we could be stuck in this range of 28.26 to 28.90 for a number of days. As we get closer to the higher trading range, observing some further signs and indications, at that point, we'll make a call whether we're going to be reversing into the puts or not. Guys, I wish you a very successful trading day today and tomorrow. I will catch you in the next video.